Okay, in this video we're going to show you two different currency strength indicators that work for 8 currencies and 28 pairs. And this is one of our blog articles from forexearlymorning.com on our blog. So what you want to do is you want to figure out what currency is strong and what currency is neutral or weak, and then pair them against each other, and then you can get positive trades when trading up to 28 pairs. The techniques that we're going to show you in here works for 8 currencies. Here's a list of the currencies: US dollar, Canadian dollar, Japanese yen, New Zealand dollar, etc. for 28 pairs. And what we would invite traders to do is evaluate currency strength trading versus technical indicators. Here's an article about technical indicators here. You can click on that and read that. But all of these technical indicators, you know, the Fibonacci, the RSI, stochastics, and all of that, none of it works. It's all pretty awful. And you need to evaluate individual currencies. A currency pair is comprised of 2 separate currencies. So look at this example here. This is a real-time currency strength indicator. This is the first indicator. It's called the Forex Heatmap, and you can learn more about it by clicking on that link right here. I'll show you that in a second. This is the Canadian dollar pairs. What you do is you group all the pairs together so you can see clearly that the Canadian dollar is weak. This is a live indicator, and it tells you what pair to trade. So if the Canadian dollar is weak, but if the pound is slightly strong, very strong movements here. These are strong movements. This isn't some 30 pip movement. This is like probably about 150 to 175 pips of movement here. Pound CAD is strong. Even on a low volatility pair like the Canadian dollar Swiss, this is a low volatility pair, but you can still get about 100 pips of movement off of them. It's a very low volatility pair if the Canadian dollar is consistently weak and driving the movement. So this is the Canadian dollar pairs, and if you click here, you can go see the Forex Heatmap. Forex Heatmap works. You know, here's a euro strength signal, so you can trade the euro USD or the euro New Zealand dollar. Here's the New Zealand dollar again. Here's the British pound, British pound strength. These are strong movements. These are not small movements. These are 125 to 150 pip movements here on the British pound pair. So you can learn more about the Forex Heatmap right here. Okay. Now, next thing you want to do is you want to set up your trend indicators to evaluate which pairs are trending by individual currency so you can determine the currency strength. So what you want to do is you want to set up, for example, you want to set up all your yen pairs together. Okay? See how all the yen pairs are common on the cross currency. So if they're all trending up, if all of the yen pairs are trending higher, then you know that the yen is weak and you can trade much, much, much safer. These trend indicators are easy to set up. You can click on that link right there. And here's some simple instructions for setting up our very simple exponential moving averages. Then you group them all by individual currency. You can group all the US dollar pairs together and all the Australian dollar pairs together like this, and determine what currencies are strong and weak. We even have our market analysis spreadsheet. If you like, you can do a very professional analysis of the Forex market. You fill out the spreadsheet by individual currency on the large time frames to see what currencies are strong or weak and driving the market. So remember, you use the Forex Heatmap to assist you with trade entries as a live indicator. You can use the trend indicators from market analysis to determine which currencies are strong or weak. So here's an example of New Zealand dollar weakness. So the base currency, you would have to be red, and the New Zealand dollar is the cross currency, you would want that to be green. It's a great example of a live indicator telling you what pair to trade. Sell the New Zealand dollar USD, which is probably actually a better signal here than buying the euro New Zealand. The euro New Zealand is much more volatile though. Okay. So works for 8 currencies, both types of indicators, the trend indicators and the Forex Heatmap. So should Forex traders use a currency strength indicator? Well, absolutely. You got to get rid of the technical indicators. You have to analyze the trends by individual currency, and once you switch to individual currency concepts rather than technical indicators, your trading accuracy will just go straight up, and you'll start to make a lot more pips across more pairs, up to 28 currency pairs and 8 currencies, not just trading the Euro USD all the time, which that doesn't work very well either. So this is 2 different currency strength indicators for 8 currencies and 28 pairs. And this article is on our blog at forexearlywarning.com.